Hey, breathing again. Some gon' leave like trees in the wind. Well, y'all gon' see like B to begin. That BC days, y'all free to pretend. Hey, cap on the internet, rap, we ain't into that. Fact, I'ma interject crazy. Hey, whack, I'ma intercept that with the intellect. Chat, better give me that gravy. Hey, that mean chicken. Gotta blow that, get it back, never know the cause. Yak, get the black, and a few stacks, never gon' lack any cobras, dog. Hey, I don't got a cross for the NBA. I seen Tobin, the all white promo vid. And if God be for me, I ain't got a mind to against me. Hey, shoot the shot like I'm Curry. Ooh, I don't cap for my pitches. Ooh, narrow way, but I'm sturdy. Yeah, I don't pass on the scriptures. Hey, walk with him 4 seasons. Never going back is no reason. Devil trying to tag you, throw demons. I don't never lack, I'm pro defense. Double check y'all Twitter feeds. It's a whole lot of big cap, like a biz hat, no ministry. You're the waterfall like winter leaves. And if you don't got Christ in the middle with the bread like a centerpiece, you'll probably gotta read too. No sheep food, so hard for the inner peace. All cap like Captain America. Cap Satan and capture the area. Cap Crunch, Cap Marvel.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Man, it's been a week, been a good but long week. Cliff, how you doing, big time? Doing all right, baby?
Man, doing good, man.
Man, did we get the bag this week?
Oh yeah, got the bag this week, man. Busy week.
Yeah, we got the bag, y'all. We're gonna jump right into it, guys. If you like what you're hearing, guys, like, share, and subscribe, guys. And if there's a bell on any platform, click on that thing so when Cliff and I come live, you can come kick it with us, man. We're gonna dive into this, man, real quickly, Cliff, man. Real quick, Cliff. Let's jump into it real quickly. Current market analysis. What's going on in the market, man? What you seeing? What you seeing?
Man, it's stagnant. The market is stagnant. It's not really moving. I'm seeing a ton of concessions. Way more concessions than I used to. This past 5 years has been wild from the inflation. I used to put the property values were going up, increasing at a crazy rate a couple years ago. Now they're starting to go sideways, if not start coming down a little bit. And then really, instead of coming down a lot, people are just giving away concessions. I'm seeing $10,000, $20,000 concessions. Jeez. That's not crazy to see $20,000 concessions.
Jeez.
So, and properties are sitting on the market a little bit longer. It's just a tough market to be in.
Yeah, I'm seeing the same thing, man. I'm seeing a lot, specifically in between the price points of 500,000 to 1 million. I'm seeing some serious concessions going on, guys. Significant price decreases. I've seen, Cliff, on some properties, man. A $900,000 property is getting decreased by $75,000, $100,000. I mean, it's just, it's ridiculous what's going on, guys. Now, you do have some of those stragglers in there of some sellers that just say, you know what I want. And unfortunately, you're seeing properties be on the market for 39, 60 days, 90 days, 120 days. If you're over $1 million, guys, you've been sitting on that property for most likely for probably over a 6-month time frame.
Oh, yeah.
Easy. Cliff, you agree, man? You disagree?
Yeah, especially those higher end ones. They're sitting a little bit. Yeah, it's a different market right now. It's just there's not a lot of buyers. It's not because you remember from a couple years ago when there was a frenzy in the real estate market, especially in Dallas.
Yeah.
I mean, from about 2010 to 2020, there was plenty of buyers. The market was strong.
Yeah.
No issues. Now I would say there's probably about 60% less buyers in the market than a normal market.
Yeah, I agree, man. Guys, it's a different market. Again, if you are a seller in this market, this is a buyer's market, you had better begin to adjust your price points or be comfortable with doing two things: sitting on that bad boy and paying that mortgage. You better be comfortable with that. And be okay with giving significant concessions, right? And also looking at some creative financing transactions. Some of these type of deals, guys. It's a buyer's market. The buyer can walk in and really kind of say what they want. Am I right, Cliff?
Yeah, pretty much. I mean, especially if you see the market if you see it the days on market getting past 60, you probably can walk in there and just. What I'm seeing a lot is probably when you see the concessions, it's buy downs.
Yeah.
Those buy downs. They're like, well, you could lower the price, but to the person buying the house, I'd rather have the interest rate at 5 something.
I agree. So what you're saying is basically they're saying, we can agree to this price point, but I want these concessions so that I can actually buy down my rate, which is really a price reduction. That's all it is.
Right.
It's all it is. It's just reinversing the deal to where it's just a buy down, which is really a price reduction. That's all it is, guys. That's all it is. But man, Cliff, want to say anything before we get done?
No, man, it's just interesting market. Really
Very interesting market, guys. Guys, that is the current market analysis for today, guys. All right, guys. Today's topics, guys. We're going to get into this thing. Yo, me and Cliff been going hard in the paint when it comes to the Fed. Am I right, Cliff?
Oh yeah,
Doc. He talking about potential rate reduction up to 3 by the end of the year. What you say? Number 2, we're going to talk about how that's going to affect stocks, bonds, and real estate. Number 3, $9 trillion in 401k funds. What you say? Yes. Trump is signing an executive order talking about allowing for 401ks, IRAs, Roth IRAs, 403bs, TSPs to be able to invest in cryptocurrency, guys. We're going to talk about why this is a big deal. Number 4, because of this fact, we're going to give you the investor playbook, man. We're going to dive into this thing real quickly. So, Cliff, man, let's dive into this real quick, Cliff. This right here, guys, is near and dear to me and Cliff's heart because of the fact that for us, what's going on is Cliff has been going hard in the paint against the Fed chairman. So when Cliff saw Australia lower the interest rates, Cliff, did you send me a message?
Oh yeah.
Yeah. And so what happened was now what's happening is we're seeing some movement happening, guys. So now what we're going to do now is there is some stuff going on right now to where now they're talking about lowering the interest rate, cutting them 3 times. One of the governors is saying this. Now, not Powell. One of the governors on the board is saying this. And it just so happens that one of the ones that's actually doing it, Cliff, she's the one that actually dissented.
Oh, really?
She's the one that dissented. She said, no, it's about time for some cuts. So let's see what's going on with this real fast, guys. We want to bring our guys from a valuetainment real quick, guys, and let's see what's going on real fast. Here we go, guys. Let's get into it.
Fed governor maintains outlook for 3 interest cuts in 2025. Okay, so 3 cuts now, 2025. That's what they're saying. Yep, they're saying 3 cuts in 2025. Let's read this here. So, Federal Reserve Governor Michelle Bowman, Vice Chair of Supervision, reiterated her projection of 3 25 basis point interest rate cuts in 2025, despite the Federal Open Market Committee decision to maintain the benchmark federal funds rate at 4.25 to 4.5. She spoke at Kansas Bankers Association 2025 Senior Management Summit in Colorado Springs, Colorado, emphasizing her dissent from July decision alongside Fed Governor Christopher Waller, marking the first dual dissent favoring cuts since 1993. Bowman based her stance on the signs of fragility in labor market conditions, stating economic conditions appear to be shifting, and as a result, we should reflect this shift in our policy decision. Tom.
Yep, this is the individual that I gave credit to, and I said, you know what? This is the first time in 32 years that we had dissenters, and she was right. And I commented at the time that I thought that that Waller, was saying it because he actually wanted to be
Justin Waller?
Yeah, well, Christopher Waller. He actually wanted to be the next Powell. And so I said, well, him dissenting, okay, but he's kind of campaigning. But Michelle Bowman was absolutely, I think, well within her rights and was correct about the dissent.
I agree.
And now she's saying we're going to get 3 cuts, which will be September 16th, 17th, October 29th, and December 10th, 25, 25, 25. That's what she's looking at. And by the way, if you go look at CME, which is the federal tracker of the Federal Board of Governors and what they say at their speeches and stuff, here we go. CME, Fed Tracker, just say Fed Tracker. Let's go take a look at where it is. It was... Okay, 35 days, 3 hours and 36 minutes. They even have a countdown clock here, Pat. It's amazing. Now go down, just scroll down. And oh my goodness, what does that say at the top of that blue bar? Oh my gosh, 97.9%. Is that what that says?
Yes.
97.9% chance that we're going to get a cut coming up here on the 16th, 17th of September of a quarter point. I think she's absolutely right, and she's out there pushing it because we are seeing a little bit of unemployment. We're seeing things that make sense for the cut. So I happen to be right there with Michelle Bowman, and I think she's had the guts to stand up. First time in 32 years we had two governors actually stand up in dissent, although you got to discount Waller a little bit because he's kind of lobbying to be the next Powell.
Yes, he is.
Interesting. All right.
So Cliff, man, real fast, man. Given this, man, what are you thinking about what's going on here? What do you think about this?
Man, how long have we been saying they need a cut? 3 cuts?
3.
That would mean a minimum of what? About 75 basis points.
Correct.
Right. So that's, almost a 1% cut. So you're going to talk about bringing, I think the FHA, which is the standard rate.
Correct.
So everybody based on it's about 6.5 right now, a little bit over 6.5.
Correct.
To bring it down to 5.5. Now, as we know, there's already buy downs. So if you can do a 5.5 with buy downs, now you're talking about close to what? About 5 for 4.75 with a little bit of buy down, maybe a 3% buy down. Now you're talking about a market that's stabilized.
Yeah.
4.75, people can rock with that. You can make that work. If I'm trying to sell a house, I'll pay concessions so you get 4.75.
Heck yeah. Why not? You'd be a fool if you didn't do it.
Right.
You'd be stupid if you didn't do it.
Right.
Dumb.
And the realtors, if they were smart, they'd give up half a point each.
Come on.
I'll take 2.5. You take 2.5. Give a point to the. You know what I'm saying, for that buy down.
So would.
Seller, you take 2 on the chin. Give 1 to him. The realtors take 1, and now that's your 3%.
There you go. But if you want to be real aggressive, realtors, I would not be opposed to each one contributing 1 point each. I would not, and I would have to go to my broker and say, "Hey, on this deal, I know that we agreed to this amount of share. Can we on this deal can we adjust it a little bit?" Because I had to do it. You have to become a little bit more creative. It's your business, right?
Yeah, that'd be smart. If you take 1, I take 1. The owner takes 1. That's 3%. That brings him from a 5.6 down to a 4.85 or so. Boom. A 4.8, I can rock with that. I can rock with that.
Tell y'all, man. Hey, I'm trying to tell y'all. Now, Cliff, let's just graduate on this. Now, if that was to happen, how could a rate cut shake up stocks, bonds, and real estate?
Oh man, you asking a big question with that one. So if you bring down interest rates, what that effectively means is everything is cheaper.
Correct.
Because money costs less.
It does.
The cost of money right now is close to 7% to get money.
Yep.
When money costs 4-5%, the cost of money is in half. So you're gonna see. And think about the amount of money that you have sitting on the sidelines in terms of real estate, even stock portfolios, because they want to, them investment banks, you know what I'm saying? They want to lend too. Yeah. So credit in general, it'll open up the economy. You're going to see trillions of dollars enter the economy. Man, we've been waiting for this for 2-3 years now.
Yes, sir, Doc. Here's my thoughts concerning the stocks, bonds, and real estate. As far as stocks, this type of move will allow for the banks to borrow cheaper debt. Most likely the banks are not going to pay they're not paying 6.5% for their money. Please. They're probably 3% range. So you're looking at probably them going down to maybe around like 2.5, maybe 1.75%. That is crazy for banks. Phenomenal, which means they'll be flush with a lot of cash when it comes to stocks. Right, which is good because remember, in stocks there's a lot of lines of credit being used. It's the same as cash to be able to sell, liquidate, make money moves. That's how money moves. It's called velocity of money. When it comes to bonds, right? I'm kind of giving a little preview of what we're going next, but bonds is going to most likely jump up because of not so much cheaper debt, because of your retirement accounts, because it's going to get access to cryptocurrency. Now, cryptocurrencies, it can also be leveraged too. So now they can also leverage that to what? Buy more bonds. And Cliff's gonna go. He's gonna go into a little bit more detail about that here in a second. Number 3, real estate. Cliff already said it. Think about it. Yeah, 6.5% right now. You go down to what's that? Let's just say 5.75% with another concession of, let's say, a point. Now you had 4.75%. Refinances makes sense. Okay, you know what? I have a 2%. I can go up to a 4.75%, maybe 4.5%. I can make that work. Sure. Now when it comes to buying now, cool. But the buyer still gets the benefit of a decreased price point coupled with cheaper debt. For the business owner, when you're going out and borrowing lines of credit, cheaper debt for you to be able to run your operations. It works well for the entire economy. This is the reason why me and Cliff have been saying from the get-go. When it comes to Chairman Powell, he's been political. He's been asinine. He's been too late. That's what he's been doing the whole time. Do you see how this is a trickle down or domino effect? Cheaper debt means a bigger velocity of money, not only for the corporations, for the governments, and for retirement accounts, retirement and institutional funds, but also for the consumer. Am I right, Cliff? Am I wrong?
Yeah, because the consumer is going to benefit. I mean, because the consumer benefits when they get paycheck, right? Mm-hmm. And and they get a paycheck when the business is doing well, and the business does well when they have cheaper money. All right.
Correct.
What you're going to do is you're going to see the stock market fly, because. So I'll break it down for you. When you're really rich, I'm talking about you got 50 million plus, 100 million, 200 million. Mm-hmm. They don't. 80% of their assets are not touching the stock market really, unless you're a stock market. You started a business stock market like Elon Musk. Mm-hmm. A lot of people with some wealth like that, but a lot of people who exited with that type of wealth, they have their money in mutual bonds.
Correct.
4 or 5%, right? And right now they're getting a premium on their money because interest is so high. The bonds are paying out great. They're not getting 4 or 5. They're getting 5, 6.
Correct.
On their money. When you lower the interest rate, they're not getting as much return on their money, so they're more incentivized to go into the market to get a return.
Yes, sir.
So you're going to see billions, if not trillions of more dollars come off the sideline because they don't want that 3.5%. They want 5.5%. So they're going to have to take that 100 million and go, I'll give 65 to bonds and 35 in the market to try to gain more yield.
Correct.
Right? Get more money.
Correct. Now, also, let's go a little deep on the real estate. Did you know that Beyonce and Jay-Z just took out a second mortgage on one of their mansions?
Oh, no, for real?
Second mortgage, which brought, I think it was like $68 million, which brought their total loan amount for the senior and junior debt at $110 million. Now, I wonder would the floodgates open up for junior mortgages as well, Cliff?
Mm-mm.
Now, what I'm saying is, with the low interest rate, would the floodgates open up for junior mortgages?
Oh, with lower interest rates, yeah, that makes sense. Because that's a way of maintaining your equity.
So again, guys,
or maintaining your first mortgage. My bad.
There you go. You see what I'm saying, guys? So it makes it easier for first-time home buyers. Cities, towns, and counties will be more apropos to doing DPAs, down payment assistance.
You know what, Dale? That is smart. I never even thought about that second lien, because your first lien, you already got that 2, 3, 4. Let me go ahead, now that lower interest rates are lower, let me go ahead, instead of refining, maybe I got a 3. Instead of refining to a 4.5, 5. I'm just gonna get. That makes sense.
Yes, sir, guys. Do you see how the price of capital moves everything in capitalism? Because everything is leveraged. The name of the game is leverage, net worth. You borrow. What you borrow, you buy, and then you die. That's it.
You have to have leverage. You know, put it this way: if you make 10% on a dollar, you made 10 cents. Yeah. But if you make 10% on $1 billion, you made $100 million. Same 10%. It's both 10%. The question is on what.
Yep. Correct, guys. Again, guys, this is a good deal. Cliff has been saying this from the get-go of what needs to happen. And finally, we are seeing this. We're finally seeing it, guys. So again, that's what's going on, man. So let's go on to the next topic. Get real fast, guys. The next topic, real quickly, because we're going to get in and get out. Yo, this right here shocked the crap out of me, Cliff. When I saw this, Cliff, I said, "Are you capping right now?" Now watch this, Cliff. We got to bring in our boy Mark Moss real fast to dive into this real fast, guys. Listen to this game, guys. If you have a retirement account, you better be listening. Here we go.
Win $9 trillion in boring 401k money gets permission to chase yield, because that's about to happen. Trump's signing the order. The game is about to change forever. I'm talking about trillions of dollars that have been stuck in losing or low yielding retirement accounts now being able to go buy Bitcoin or private equity or real estate.
Wow.
And for the first time in history. Now, this isn't speculation, it's happening. And here's what everybody's missing. This is about the entire financial system reorganizing. When the safest, most conservative money in America, retirement accounts, starts chasing alternative assets, you get what's called an asset supercycle.
Wow.
Now, the kind that creates generational wealth. So in this video, I'm going to show you exactly which assets explode first, the timeline that Wall Street doesn't want you to see, and how to position yourself before the herd arrives. So let's go.
So Cliff, man, before we dive into this real fast, man, real quick, what do you think about this, man? Talk to you, partner.
Man, they're juicing the market. They're incentivizing people to put their money to work. And he's right when he says the super cycle is one thing. Obviously that's money just flowing into the market. But the trick to the game is being first. That's the trick to the game. You got to know that something has value, that it is something that other people want.
Correct.
You have to know that before other people. If you're last to the game, you're not going to make any money. You're the one that they make money off of. If you're the last person to buy that stock, you're the one that made them money.
Ooh.
I'm first to the stock. I'm first to recognize that there's something happening and that you should own this. And then once everybody realizes you should own it, that's when I sell it to you.
That is correct, guys. I'm trying to told you. Notice that they said what? Bitcoin, private equity. That's the third. What was the third one, Cliff? The third one was what? It was Bitcoin,
Real estate.
and real estate, guys. So again, Bitcoin, private equity, and real estate. Notice these are two are assets. One is a different way for money to flow. Private equity. Let me give you something real fast. A good friend of mine owns an insurance distribution company, right? And he was making $10 million a year. That's top line revenue, right? And he had went to New York because he was looking to do one or two things: sell the company or raise some additional money to be able to scale this company, right? And so he went to talk and spoke to 7 different investment bankers. And Cliff, they told him how his company was structured at the time, because they didn't own their CRM systems, Cliff. They said that they would either sell or lend at a 5x multiple. So what's 10 million times 5x? $50 million. He said, no, hell no. That didn't make sense to me at all. I didn't put to my blood. I want a higher payoff. He said, what do I have to do to be able to get a higher multiple? This is what he did. He said, okay, they said, you have to own your CRM platform, right? You got to own it. You can't lease it. You got to own it, because that means you own all the information within the platform. He said, cool. So he went and raised I think it was $3 million from Oscar De La Hoya, his private equity company number 1. And they invested with him, and he developed his own CRM, and they launched it 12 months later, guys. He sold his $10 million top line revenue company for guess how much money, Cliff?
$100 million.
$350 million.
Wow.
Plus, he had options for it to go up to $500 million, $500 million. And guess who actually bought the company?
Who's that?
A private equity venture capital company in Dallas called Integrity Marketing Group. They buy insurance distribution companies. That's all they buy. Do you see the power of this? Think about it. If you had your retirement money into a fund, I'm not a big fan of REITs, but a real estate fund of so that actually invest in active stuff, just like the company that actually bought my friend's company, right? You're making an 8, 10, 20% return. That's 8 to 10% return. Not bad. You actually outperforming S&P 500. You are. But your money, the velocity of your money is quick. It's quick, right? Of course, real estate. Of course, but cryptocurrency. That one right there, Cliff. Why would cryptocurrency be a big move here in your opinion, Cliff?
Yeah, crypto is just I mean, it's a different, put it this way, it's more like private banking, right? Except it's the people who own the banking system.
Yes.
So the transaction fees that you pay to the bank, instead that goes to somebody's pocket in the system. It's not going to the bank, it's going to somebody else. You know, what can crypto really be used for? I think they're still trying to figure that out. I think Bitcoin is obviously the stakeholder, because the reason why so Dale, why do you think Bitcoin why does everybody want Bitcoin? You can have Ethereum, you can have, some other coins. Why do people want Bitcoin more than any other?
I would say because Bitcoin was the first to the market. It's the most stablest coin. They had the most, I guess, investors backing it. Would that be correct?
Yeah, that's part of it.
Okay.
But the main one is anonymity. It's one of the only cryptos that there's no tracking, because because think about it, the person who created it is Satoshi, right? That's the name that's the creator of Bitcoin. No one's ever seen him. They don't even know if he really exists.
Whoa.
Right? That's why. So that means there is no one behind Bitcoin. It just functions on its own. It's its own stabilized. With Ethereum, there's actually a team behind it with other companies. They can change it. They can manipulate. Bitcoin cannot be changed or manipulated. It's almost like someone locking. They have the key. They lock it and they threw it away. No one knows where the key is. Bitcoin does not have there's no guardrails. So you know that the market is the purest market you can get. There is zero manipulation. There can't be, because there's no one behind it. So that's the value behind Bitcoin. It's anonymity. You can own it and nobody can know.
Jeez. So that's why it's the most appealing. That actually makes some sense, guys. Do you see what's going on, guys?
Yeah, because now I'll give you just a piece of history just real quick.
Okay.
The number one reason why Bitcoin was created was to hold Federal Reserves accountable.
Okay.
Because if you don't manage your money, Bitcoin will.
Ooh.
You want to inflate your money, Bitcoin's value will go up. And people will start using Bitcoin. It's the only currency that could rival the dollar. That if people don't like the dollar and it gets too devalued, they can go to Bitcoin and use another currency that's not manipulated.
So let me ask this question real fast. What are your thought process on the Genius Act and the Stable Act being passed? What is the play there, in your opinion?
I think it's more of a play on the future of technology. I think that, like, basically, Bitcoin and all these other coins, they're really just it's a protocol.
Oh wow!
And the truth is, they don't want to reduce what it could be by being like, you can't use Bitcoin. Maybe it could be something amazing. We don't know yet. We're not quite sure. There's still some applications. One big application could be that's still being kicked around is micro shares of real estate.
Oh, yes, sir.
I could sell my property, and then if I want to sell Dale, you need 5%. Yeah. Well, instead of your house just sitting there, it could be on an open market where I could buy a piece of your house if you decide to put it on the open market.
Now, how would that be different than what they were doing with mortgage-backed securities? Because that was kind of what they were doing back in 2008 with mortgage-backed securities, correct?
Right, but exactly. But those are the mortgages, and the difference is this could be some, like for example, if you have a house for sale, or let's say any house, it's $100,000.
Okay.
You could turn that into, say, hey, this value is backed up by this LLC, and now I'm going to split that LLC. I'm 60% owner, but the 40% I can go ahead and sell.
Mm.
And now that can be tracked online. If you had to prove that you
Ah.
owned it, the Bitcoin could be like, hey, here's the transaction logs. This is proof of ownership. And if you have that with a broker that actually is keeping track of all that, that's much like the NASDAQ that's keeping track of all the transactions. You could show proof that when someone sells a house, hey, I deserve X amount.
Interesting. Okay. So again, flexibility, proper leverage. So I would say the investor playbook, guys, is very, very simple. You're gonna have to really retrain what you know about money. Money's different now. It's totally different. Totally different, guys. Bitcoin is equal to the dollar in some form of fashion. It is. It is. It's decentralized. It's more secure. It shakes hands with the government now. Cliff just said something that was mind blowing, which I knew about, but being able to sell portions of your house in units and or shares, kind of like a company, and everything being tracked digitally with Bitcoin. I believe this is a way for them to be able to siphon out inflation, because the whole thing is to inflate the debt away. This is the whole play. Well, how do they prolong that? Easy. Give access to your retirement accounts, right, to digital dollars called cryptocurrency. Cliff, you agree, disagree?
Yeah, I think the entire system's moving more towards. I think everything's moving towards the stock market, where it's more liquid. You know what I mean? But you have access to your funds versus tying them up. Yeah, I think that a lot of stuff's changing as we go into the future. Especially AI. I mean, AI is going to change the world in ways that
It is. It is.
it's
It's man. It's trying to transform how you think, guys. It's real simple, guys. The investor playbook is very simple. Position your capital to increase your yield. I will look at cryptocurrency. I will look at private equity type of funds. I will look at that, right? And I will look at real estate. Or what you can do is you can couple all three of those together by investing into a fund scenario that actively invests in real estate and also cryptocurrency, and also private equity as well. So you get access with your money going to a private equity type of fund scenario. You get the benefit of private equity yields, real estate yields, as well as cryptocurrency yields. So you get the benefit of all three. All three. Again, thinking differently when it comes to money. Think differently. It's real simple, guys. We got in the bag today on this one, Cliff. We got in the bag on this one, guys. We really did, man. So, real quick, guys, man. It is a blessing, guys, for us to actually have a licensed appraiser on the screen. Cliff Hunter, guys. Hey, Cliff, tell them about hunterappraisalman.com. Tell them what you do, guys. This is a licensed appraiser in the residential arena and the commercial arena, right? He gets consulted when it comes to new construction, apartment complexes, hotels, residential, you name it, anything appraisal. This guy is the point guard here. And Cliff, let me ask you a question. I always ask you all the time. How often do investors talk to appraisers like this?
Oh, never.
Never. So this is a rarity. Okay, Cliff, man, tell them about the service. Tell them what's going on.
Man, just go to hunterappraisal.com. Give us a call. We pick up the phone. We'll email you back. We're always in contact with you if you need appraisal or even consulting. So, we get people all the time who call us who just got questions, and we'll set up a consulting session with them. We had somebody who wanted to build a subdivision, wanted the idea on valuations, didn't know if he needed an appraisal or not, so we set up a consultation with him. Have another lady who is fighting the taxes because taxes going up here in Dallas, and they need to have some valuations on that. So we do a lot of different things that deal with the value of the property and different real estate, even doing a little bit of commercial. So just give us a call, hunterappraisal.com, and we'll put everything together for you.
Real simple, guys. Hunterappraisal.com, guys. Again, having access to a licensed appraiser, it is rare. So now you have access to one. Also, guys, very quickly, guys, when it comes to us, when it comes to real estate, guys, we're all about things here is giving access to free information. For us, guys, we want to give back by teaching people how to buy real estate the right way. You make money in real estate when you buy, not when you sell, right? When you buy, not when you sell. We went through a whole segment on today's show talking about how as a buyer, you can come in and really write your own offer. Real talk. But again, that they take skill level, not just leaning upon your realtor. You got to know what if you actually had information that you can find distressed properties in your city, county, or state, right? That you can buy below wholesale. That is a skill that is unmatched. No business school is going to teach you this, and we give away this free ebook. It is free. All I got to do is scan on the QR code, click on the link below in the show notes, or if you can do any of those things, guys. Very simple. Direct message of me the word real estate, and my team will get you out that link today. Cliff, tell them about what's going down, big dog.
Man, yeah, just go check out the book, man. Just if nothing else, skim through it, take a look. Me and Dale, it's like what you got to look at is those a lot of words. You also see a lot of people saying a lot of things, but what you should look at, what you see from me and Dale, that I think that y'all should pay attention to, and if you haven't paid attention to it, then you miss something. Is look at the consistency.
Yeah.
The reason why we were able to find out and solve these issues and do what we're doing is because we're here and we're consistent. And that's the backbone to being able to get anything done. So check out the book, hit us up, and we can show you how we're able to be so consistent, showing you how we're here every week and showing you the productivity and how we're able to get our gains. So check us out, man, and definitely join the Cash Flow Club, because that's going to be huge for you, where you're going to get not just what we're telling you now, but one-on-one.
Yes, guys, the Cash Flow Club, guys, that's another thing that we are relaunching, guys. We are putting together a system to where we give you access to what we call our cash flow deal flow board. We get a ton of deals that come across our desk all the time. Guys, we can't buy every deal. We just really can't, right? But we're willing to give access to those deals to our Cash Flow Club members, to those distressed property deals. Distressed. We don't buy nothing but distressed properties. Nothing but that. That's all we buy. That's it. That's all we buy. Whether it be apartment complexes, office buildings, new construction, or residential. If it ain't broke, don't fix it. And we're trying to fix nothing at all. This is the reason why we want to give the information to you, because if the deal makes sense and you need a partner, we'll partner with you too. But get this, you have a licensed appraiser that can look at everything and say, you know what? I can see what's going on. Here's the scope of work, which is what it should be. With this scope of work, it's going to be the asset's value. It's going to have after repair value. It should be your offer. Boom. It's that simple. And I said, you know what? I'll bring the money. Let's go buy it together. It'll be your deal. Your deal. But now you have partners in the deal if you need us. If not, no problem. We still give you access to the deal flow board. Go buy it. So you go buy it. But again, learn the skills of locating distressed properties, guys. It's real simple. Cliff, man, you want to say anything, man, before we get off, big dog?
Nah, same thing to say every week. You one deal away. Could change your life. Hit us up. Enjoy your weekend, man.
And every single time, before you leave, guys, while you can, you see that thing. Take pictures for your mom and holler spot. God bless you guys. See you next week, guys. All right, y'all. Peace.
Walk me through everything, but let's start from the beginning. How'd you get into this space?
Well, when I was 17 years old, my Uncle Gary, who still lives to this day, introduced me to a concept called passive income.
Okay.
And I said, oh, Uncle, what's that?
Yeah.
He said, something that you do one time, but you get paid over and over again. I'm like, why am I trying to go to college? I want to learn how to do that. Gotcha. And so while I was in college, I began to look at business models that generate a passive or residual income. One of them was real estate, because everybody and their mama actually had it, from Robert Kraft, Jerry Jones, all the billionaires actually had real estate in their portfolio. So I began buying real estate while I was in college. The first deal that I did, I made $3,500. And in college, that's big time. In college, you broke.
For sure.
College.
For sure.
Then I went from $3,500 to $10,000 to $26,000, and now $35 million worth of real estate. For me, business is always about solving someone's problem. Whenever you're buying a real estate transaction, the one thing I look at is, what's the pain point? Why you want to sell for? And typically, I like buying properties below wholesale. I never buy properties at retail. That didn't make sense to me at all, because I'm planning for the worst case scenario. Each and every deal that I actually acquire, I actually take home cash when I actually acquire it. Wow. Every single time.
If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, Click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.